Okay, first of all, I would like to thank the organizer of Asbar to give me this opportunity and to speak with the esteemed audience. So what I'm going to do for the next 40 minutes, and I understand I have 1 hour, 40 minutes of speech and 20 minutes of Q&A. I'm going to share with you and what is a blockchain technology. And also before that, that's a fractional equity sharing concept, how it is made simpler and possible by the blockchain technology. And I understand the audience may not be typically very technical, so I'll try to keep the topic a little bit general. And I will also use 3 of the examples to illustrate the blockchain application concepts. So a little bit about myself, and I have been a career banker. And first of all, out of business school and on Wall Street, I started with Morgan Stanley and Chemical Bank, Equitable Life, from an investment banker to the derivative traders. So led a quite successful career in the investment banking and capital markets area. So I was transplanted from New York to Singapore, and I built and ran the derivative industry basically in Asia. And subsequently in Hong Kong with Chase. So with all that corporate career, then I left and to start some of the entrepreneurial venture back in Singapore. So even though I have had a career always as a senior investment banker, but I always have penchant for entrepreneurial ventures. And even if I remember back in 1994, when we first started the risk management consultancy and subsequently the banking system company, and our company was the first one to have the email address on everybody's business card. And I still remember the days when people first look at the business card, they always question, what is that, that email address? So also in the very beginning, we're always trying to pioneer in the technology business. Our company's website and for the Singapore company is called Advanced Risk Management Solutions. And the website arms.com.sg has been ranked as the #1 finance-related websites by IBM in the earlier stage of the internet. So that was the good old days. And then since then, we've been involved in many technology company and always trying to try out all the new idea. So currently, and we have about 3 technology venture related to blockchain. And some of them actually had an earlier fractional share, and the basically trying to securitize the ownership. And I will explain to you how is that related to the blockchain tokenization. So first of all, what is blockchain? Blockchain is basically a decentralized database technology. And most people are familiar with what the database is, in your company and in your office. From the earlier days of Microsoft Access to Oracle database, and then Sybase, MongoDB, and also nowadays you have the MySQL. So these are actually centrally located and centrally managed by the corporation. That's why it's called a centralized management. What is the main breakthrough for blockchain is basically this database is no longer located centrally and managed by a few individuals in the corporation. So this database could be spread all over the world in 20 nodes, 200 nodes, 2,000, 20,000, or 200,000 nodes around the world. All these computers, in their CPU, they have a copy of this data. Now, anybody who want to make changes to this data, you need to get the 51% consensus of all the different nodes before you can make changes to this data. That's really what it is. That's really what the blockchain represents, a decentralized ledger technology or distributed ledger technology. Now, why is that so important? Because in the past, all the data, in the electronic format, or before you even have internet in the electronic format, you have physical format. It's all controlled by an individual within the corporation. So this person can change the data anytime he wants. So how can you actually trust this person not to alter the data for his own advantage? Now, all of a sudden, you got a decentralized decision making, and you need to get a consensus before you can make any changes. That really transformed the world in terms of business transactions. One of the best application is basically to apply to money, to currencies. So let's take a look at it. Why is that so important? Why? Because of the blockchain. And nowadays we have Bitcoins, we have altcoins, and stable coin. Pretty soon we're going to have a central bank digital currency. In fact, the Chinese central bank already has the digital renminbi. They have already done more than 300 million. They are sort of the pioneer to really test out this concept. And of course, you have a few other countries, Marshall Island and in the Bahamas, they have a cent dollars, but none of them so far is as significant, of course, as the second biggest economy in the world. So that's the digital currency. Now, before we get deeper into the cryptocurrency, let's review a little bit about the theories for money. Now, in the old days, people basically using any physical item, such as a seashell, such as a metal, could be silver, could be gold, or in the old days, people use the salt, any mine or spices, and or even using beads as a currency. As long as you can satisfy this as a medium of exchange, or you can count them, and if you put your whatever the value into it, you have to get this currency to be able to hold the value. Then later on, people realize maybe we don't need a physical item. If somebody write an IOU, a debt, if we can tokenize that debt, as long as people accept it, we can use that as a currency. Okay. So first of all, then you can understand these are all the criteria, and in order for you to have a currency. So for example, if you go to a Club Med, in the 80s, 90s, that was very popular, and they take away all your belongings, all your real cash, they give you beads. With that beads, you can actually buy beer, buy drinks, and then they will actually let you play games. If you play games, you win a prize. They give you more beads. So that's a form of currency within isolated community. So then came Bitcoin in 2009. So most people are familiar with the Satoshi Nakamoto's white paper. First of all, he want to create, because of the internet, an electronic version of money. So if it is the electronic version of the money, you actually have to have a couple criteria to fit in as a money, right? And you can have a medium exchange, unit of account, but traditionally you have the other characters such as durability, fungibility. And what do they mean? Durability meaning, you have a seashell, you have a gold coin, so it's not going to be destroyed easily. Fungibility, that could be the same seashell, even though it's kind of dirty, a little bit broken on the edges, but you can still use that to exchange for the same value. Or if you nowadays have a dollar bill, $1 bill is very dirty, the other one is very clean, but they can still, be interchangeable. Then divisibility, which means all your currency, you have to be able to divide them into cents, or add them up. And cognizability, most people at the sight of it, they know what it is, And portability, you can carry it with you. Then the next character is actually very important. It has to have the scarcity value. It cannot be unlimited supply. Therefore, traditionally, if people use a physical item as money, that created a lot of problem. Because let's say in some community you use a seashell, all of a sudden, the wave and bring to a lot of new seashell to the sand beach. or somebody discover another salt mine, that will totally disrupt the whole money supply and make some of those people who discover them, filthy rich. So these are the criteria. Now, what is Bitcoin then? And how does it relate to the blockchain technology? Okay, so let's take a look at the different type of money that's available. I have described the commodity money using a physical item. Now, then some people say, well, maybe that's too heavy to bring a gold coin, with your whole pocket with a Bitcoin. Why don't we just use a paper to represent how much money that we hold? This is actually the US dollar or the major currency for the European countries. And from 1944, and based on the Bretton Woods system, everybody agreed to peg the US dollar at $35 per ounce. So that period is called the gold standard. That represented the money of a tokenized money. Then in 1971, and the President Richard Nixon, at the stroke of a pen, and to abolish that gold standard. Since 1973, the US dollar being free floating, and that is called a fiat money. What is a fiat money? Fiat money is basically, I'm the sovereignty, I'm the government, and I give you the coin, give you the paper notes as a legal tender, and they have value because I say so. So that's called a fiat concept. Now, if you look into more theory, I know we don't have time to talk about all this, and it's basically the difference between a chartalism versus a metalism. Whether you have something physical or something you don't need it, it's just a word of the government. The other two type of money is a fiduciary money, and it doesn't have to be a government. It could be like a Medici bank in the old days, or somebody write a check, and then you endorse it, you can pass on to somebody else. That is another form of money. The last type is actually very interesting. That's called a bank money. That's basically the bank's ledger. So again, this part of it, there's a lot of research for those who are interested in this field. And I encourage you to Google it, to read up. That bank money is basically the money creation and what the government uses as a money supply to control the monetary policy. And somebody, let's say with $100 deposit in one bank, then the bank can keep $10 and then lend out the $90 to another bank. Another bank keep another 10% and lend out to another bank. And hence, you create a lot of new money. But the fact what it relate to Bitcoin is all these money has no physical item. It's just in the ledger of the bank. All right. That's what Bitcoin copies. Because right now, all of a sudden, previously, the bank has a database. As I said, it's centralized. It's managed by the bank employee. They make their own decision. All of a sudden, that database is distributed all over the world in different nodes. So that's what Bitcoin is. That's basically a trustless public ledger. Why is that important? Not only at the moment you mine it, you create it, you have a record, okay, and who owns that, right? And the Bitcoin creator make people to do work. They let your computer using your CPU power to do the proof of work to solve a puzzle. Once you successfully solve the puzzle, the additional Bitcoin you mine belong to you. Then you need a public ledger. Everybody has to agree, at least 51% consensus. This person owns that new Bitcoin, okay? Now, the second major question is, how do you use it? How do you circulate it, right? If you have a physical money, you give it away. And nowadays in the cryptocurrency, we call it airdrop. And or you can actually let people do work, just like for Bitcoin. Let all the other nodes with your computer CPU power to solve a puzzle. That's how you encourage the circulation. Now, the second most important point is when you spend it, how do you keep track of it? So therefore, because the Bitcoin is electronic money and it's sort of similar to a computer file, but what is different from a computer file is if you want to spend it, you send it to somebody else. The big question is, how do you know this person is not going to make a copy and send it to somebody else to spend it again? That's the genius invention of Satoshi Nakamoto. So he created this blockchain concept then you need 51 consensus to make sure this person can only spend that Bitcoin once, and that's it. So from that 2009, that introduces new revolution of a blockchain. Subsequently, other than the Bitcoin, most people know you have a lot of altcoin that in 2017, from 1617, that's a peak of the ICO. Nowadays, I will not go into some of the too much of the detail for the limitation of time. Nowadays, it evolved into a stable coin. What stable coin is basically just packed into the conventional fiat currency. So let's say the Tether, the USTD, that's pegged to the US dollar. Therefore, the stable coin's value is really just take advantage of the technology. However, it doesn't have the monetary aspect of it because it's fully pegged. Whatever US dollar depreciate or appreciate against other currency, so does a stable coin. That turned out to be the most popular. However, if you look at stablecoin, right now it's in the private hands. That's basically what the central bank first has to duplicate to create the central bank digital currency. But of course, the central bank has more concern. The European Central Bank or the US Federal Reserve, they want to make sure once they issue this, take the genius out of the bottle, they can control it, to continue to conduct the monetary policy. I also need to mention, all these innovation didn't really solve the long-term solution for a best currency. And I myself, I will explain more in the next slides and create a concept called TAREV, which stands for Total Aggregate Real Estate and Land Value for a sovereign entity, which means, and instead of gold standard, again, on that block side, you can see a lot of these explanation from an academic standpoint. And the TAREV has a lot of advantage over the traditional gold standard because gold, you can actually rob it, steal it. Gold, because of the fact it's portable, it creates a lot of wars, but nobody can rob your islands away, in your country. So that's why real estate at the end of the day, which is really the best commodity to back up your fiat money. So that would be the best form of a representative money, okay? Lastly, in this section, I would just mention a little bit about the non-fungible token, which is also something new. And what it is actually evolved into from the video gaming, like the previous speaker talking about gaming, esports, and all that. So if you can have a reward token within those applications, that turn out to be a collectible, or somebody just create some electronic art image, they can actually subdivide it because they created it electronically. It's much easier to tokenize. Then people claim this has value. So what is the future application? You can link up to the physical world, to the artworks, or some people trying to link up to the real estate. Now, that's another whole different discussion talking about the securitization aspect of digital currency. But basically, what I want to mention, and one of the most important concept is people basically just create some new NFT, just the same way in the old world people create a painting. Then they say, oh, it has value, like a Mark Roscoe. It's cost 50 million for a simple painting, a few colors. So that's kind of a little bit dangerous. However, that's really where the human society has been, people just putting a value that's created an asset bubble and created when the bubble bursts, and they created a lot of financial distress for the society. And very briefly to the next two concepts, it's called DeFi, and which is the hottest area, is decentralized finance. And previously, people just quite satisfied just owning the Bitcoin for the appreciation. But nowadays, because of a lot of stable coin, then people say, I'm putting my money there, I'm not earning interest, Then again, whenever there's demand, there's innovation, and people created a way to create a yield interest for those the cryptocurrencies. And so far, the majority of them is based on the ERC20 token on the Ethereum. And again, this is a whole big new field, and it's hard to conclude now, especially in the yield farming. and it's actually quite dangerous. You know, if you say the ICO lasted for a couple of years, right now people see the negative consequence of those ICO sponsor when the regulator, you know, and all of a sudden they get to them now. But yield farming, that's just starting from, you know, within a year or so, and there's a lot of high flyer. There's extreme volatility. People made quick money and lost a lot of money. Basically, I just want to mention one academic concept. How do you create a yield? Because in the traditional money, let's say a bank lends you a money. Let's say in the old days, you know, somebody want to borrow the money and build some ship from Europe and go to Southeast Asia to bring by some spice, and they can sell it, you know, 5 times, 10 times higher price. They are still providing value by lending. But in the cryptocurrency, so far you don't have that opportunity to create value. The way they create value is by staking. And this is talking a little bit deeper in terms of the technology behind it. The Bitcoin is still asking people to do work in order to mine more new Bitcoin. But in many other currencies, they basically are saying proof of stake, how much money you have. Therefore, if you lend your cryptocurrency to somebody else, they can put it together to create new the tokens. That's called a liquidity mining. Anyway, with this as a background, I hope it's quite general, and at least I give you a good understanding to for the next stage. I want to use some example. How can we use those concepts to go to the next stage? Now, before I get there, I want to mention a little bit on my personal journey. I've been involved, and since the days I was a banker, then I retired from that. I've been involved in a lot of tech ventures. And as a derivative trader within the bank, you know, our job within the bank or structured derivatives banker, we create new financial instruments. Then you create a capital market for it. So we repeated that over and over again. You were basically just a financial innovator within the bank. So when I left the bank, you know, I continue on in that trend. So I brought that expertise to the real estate market. So way back in the beginning, we created the predecessor for the index future and option exchanges on real estate. That ended up eventually in the CME, traded a future and option contract. So then in the second stage, I was called back and to China. I was the first foreigner to work on the communist-owned bank in 2005. And we created an interest rate swap. I will explain to you in the next slide. So when I came back, then we focused on an OTC version of the real estate. That's called a swap rent. Again, on the block side, there's a lot of information there. What is most significant, I want to spend a little bit of time explaining, that's a FAJO, and related to that, that's a Tyrell. So here is what I did in the future and option exchange on the real estate indices. So then I went back to Beijing, and I was the chief investment officer and the number 3 person, you know, in the 5th largest bank in China. We created a miracle, did the first interest rate swap. Before we arrived, the Chinese, you know, corporation individual, they couldn't control their interest rate risk because all the loan is a central planning communist. So whoever needs money, central bank gives them money to the state-owned company. Then you build bridges and highway. How do you pay back? 1-year deposit rate. So it floats every year. What we did that's so revolutionary with my team, we introduced the 10 billion first ever interbank interest rate swap, fixed versus floating. Because of that, that bank became the first commercial bank to offer long-term fixed rate mortgages. So that totally changed the history of the Chinese financial market. When I came back in 2005, I took that original real estate derivative into an OTC version that's called swap rent. And there's a lot of literature on the internet. And subsequently, I created that FAJO concept. This is actually in the CPI financial, and that's a perfect fit for the Islamic finance. And let me explain to you why. What FAJO is, and it's basically a flexible, reversible joint home ownership. So instead of buying a single family home or a condo using down payment and a mortgage, you can actually put together, let's say 4 person or 10 person together. Everybody come to the table with cash. Then you form a company or business legal entity in any country. In the US, let's say the most convenient is LLC. Use LLC to buy that one home at a time, one single family home at a time. So let's say 4 person. Each person owns a quarter of them. Now, one person decides to be the tenant for this house. So therefore, he make monthly payment. He himself is also a co-investor. Each quarter of the monthly payment goes into each one of the 4 investors that owns this house. This is a simple concept. Took me a long time to throw away the derivatives. It's way too complicated for the consumers to move on to this equity sharing concept. What is the significance? Number one, the property will never have a mortgage or to be used as a collateral for a loan. If you do that, you will get foreclosed. That's what created the financial crisis in 2008, 2009. So at the peak of the market, I was brought to Washington, D.C. together with Chris Larsen, the guy who started the Prosper.com. Now he bought over the Ripple, the cryptocurrency. And he had that P2P lending concept. I had my swap brain and Farjo. We presented it to the conference that included the, for example, Mark Calabria, which now is the director of Federal Housing Finance Agency. He used to be the chief of staff of the Senate Banking Committee. Basically, at the time, U.S. has a financial crisis, and they were trying to find out what are the solutions can solve it. But unfortunately, and as usually happen, Wall Street during that time, they sort of screwed up the whole world, and they lost the credibility to launch a new innovation. So in any case, that was the peak of the time. I also presented the idea to IRTI, the Islamic Research and Training Institute of the Islamic Development Bank, back in 2009. And so again, during that peak of period, I spent a lot of time introducing that whole academic concept, but I will mention about the execution part. And before that, let me just to mention again, what is the advantage or value of a Farjo? First of all, you can understand no more mortgage. The property will never get exposed, but you cannot prevent people from borrowing money to have a leverage return. So therefore, one of the 4 people, if you want to use a leverage to have increased return, so let's say, a Jewish person, probably good at finance, you want to borrow money. Before you come to the table, you borrow money for your quarter stake inside the single family home. If you cannot service that debt, you get foreclosed of your 20% stake only. But the 3 other investors will not be affected. You see, you can isolate the leveraging down to the individual level. So why is that important for the Islamic finance? Because in the Sharia law, and they sort of have this concept, the riba concept, right? So again, I encourage you, if you're interested in this topic, because I spent a lot of time, at least 10 years of my time into this, I encourage you to take a look at the, there is a lot of information, including a short video, the video clip about that, okay? So because of the Farjo, for the first time, we get to quantify the real estate, right? If you can actually have fractional share of the ownership of a real estate, all of a sudden, from single family home to hotel to any office building, commercial property, then you can quantify the entire real estate holding of a country. Therefore, I came up with the idea of the TAREL. If a country can actually quantify and all their real estate holding, then you can use your entire country's real estate and land value to back up your currency. Again, there's a lot of academic discussion why is that more superior. But to use real estate to back up a currency is nothing new. For example, in France, way back in 1796, they got assignat mandat. They already, the French government need to borrow money to finance the American Revolution, and it didn't work. Then in 1924, after World War I, Germany also tried using real estate to back up their own sovereign currency, fiat currency. So it's called Rentenmark. Both of these failed. Why did they fail? Because there's no technology. you cannot quantify the real estate. How do you tell, how does the real estate value go up and down, So nowadays, again, with that, the quantification technology, especially now with that blockchain, that could make this possible now for the first time, okay? So again, in 2008, 2011, I spent a lot of time on this. You see, when it comes to execution, what can we do to make it happen? That one single family home, I got equity investor. There's no mortgage, no loan. So it's basically just trying to securitize a single family home. Everybody own a stock in a company. Basically, we're trading each condo, each home, one home at a time as a company to own a share in it. There's no lending concept. So it's perfect, regarding complying to Ryadh. So the only way during that time under the existing legal infrastructure, that's called securitization. What is the problem? You have no trading liquidity. Secondly, after financial crisis, we're trying to launch it back then, 2011, 2013, and people are scared about single family home because of Wall Street, made a whole mess of the world. Nobody want to invest in single family home. Lo and behold, in 2017, with the ICO, initial coin offering. For those of you who are unfamiliar with what happened into the tokenization, blockchain, or cryptocurrency and ICO, what ICO is the initial coin offering. Instead of offering a stock, anybody with a good business idea, you don't have to have a product, you don't have to have a business. You can go to the token world, token market, and trying to raise 50, 60 million. You see a lot of young programmers from Ukraine, from Russia, and young kids with no legal knowledge, banking or the legal knowledge, all of a sudden they own a token and they raise 50, 60 million dollars. So that's what the whole market went wild. Why did it happen? Because during that time, there were almost 600 billion of cryptocurrency holder, the majority of them in Bitcoin and Ethereum and Ethers. So they were looking for alternative coin. That's why it's called altcoin to investing. So that period just went wild. And then being a seasoned, a licensed investment banker, we were a little cautious. We got caught into that wave as well. Now, very quickly to the next concept, okay? In the fourth stage, we extended that whole concept into yacht, fractional share owning. So why does it make sense? Anybody, let's say you buy $10 million yacht, or you can buy a $500,000 a boat. You don't use that boat or yacht whole year long. Why don't you have 4 person owning a yacht? Each person using 3 months of the year. That makes perfect sense. In fact, without the currency world, blockchain, people are already doing that. That's called a fractional share co-ownership. But it's very difficult. It's the same problem with without the technology. But nowadays, again, with the tokenization, you make the fractional share co-ownership much easier. So eventually, in 2016, we consolidated all these fractional share of real estate to own a vacation home and fractional share of a yacht or artwork and into WeCoOwn. And that's what we end up with this current venture of a WeCoOwn and We Property Owner. Basically, eventually, after 15 years, what it boils down to, let's say we can create a platform for any potential buyer. If you don't happen to have a family or friends with cash to buy the things with you, and then you don't want to be burdened alone by a 90% LTV, the large loan amount, and then get foreclosed, later on. You can actually just come to the website and then post a picture to say, hey, this is a vacation home I want to buy. This is a painting I want to buy. This is a yacht I want to buy. This is a jet, an airplane I want to buy. Who wants to join me? That's it. Very simple concept. Therefore, people take a look at it. They say, oh, I love it. I'll join you. Again, so that's equity sharing being facilitated much easier than before now. We created a companion site. It's called We Property Owner. Because of the enhanced buying power, it's not just one person anymore. Whatever item, hotel you want to sell, office building you want to sell, your single family home you want to sell, yachts you want to sell, your horses, race horses you want to sell. Now, with a potential buyer, it's a group of people instead of one individual, your buying power is much higher. Therefore, the seller would be much more willing to list on the website. Again, all these services are free, and I want to just show you quickly. This is with the WeCoOwn. Then, as you can see, and this is a We property owner, so it's interrelated as one of the same free platform. Anybody can be a member for free. So how does it relate to blockchain? First of all the transaction is irreversible. In the blockchain lingo, they call it immutable, right? And you can actually get everything online. Your transaction being done, and there's a property management system, and everything online. You cannot renege your purchase and sell. So this is the first step. And second step, you can also introduce a cryptocurrency, and whoever purchase a property, you can give them a rewards. That's called a utility token. So many applications can make this traditional simple concept, which I worked on for 15 years. All of a sudden, because it's technology, they get turbocharged. So now for the remaining time, I want to mention a little bit about the MuleChain and TurboChain, the next two application of a blockchain. As you can see, I spent a lot of time in the fractional share concept with the technology, and then pay for the lesson with a lot of money, a lot of my time. And it didn't work before because without the technology, you have securitization, a heavy regulation, and no trading liquidity. Now with the tokenization, all of a sudden it makes perfect sense for WeCoOwn. So in 2017, at the peak of ICO, I hop on the bandwagon, trying to get involved in it. Lo and behold, I learned so much about cryptocurrency, learned so much about the ICO, blah, 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 blockchain. Then during that time, if you go to a cocktail party, what do people talk about? They talk about, hey, did you buy Bitcoin today? And how is your Ether doing? They're trading cryptocurrency, and that created a lot of newly rich for a lot of young kids, people who never experience what business world is like. But, it's just unbelievable during that time. Anybody who touch upon put the money into cryptocurrency, you make a lot of money so easily. They think they are better than Warren Buffett, A lot of 25-year-old kids, they own $5 million home in Santa Monica. It's just crazy during that time. So I sort of got the inspiration. I want to pick up where I left off for the WeCoOwn project. Then in the Christmas party in 2017, so I went to the Christmas party in my office building. I met a young person. He's a very, energetic and person who owns a moving company. So of course, in the party, we talked about trading cryptocurrency. Then I say, oh, I bought $300 worth of Ether today, blah, blah, blah. So I explained to him, do you understand the technology behind the cryptocurrency? As I explained to you before, decentralized distributed ledger technology, decentralized database that makes the cryptocurrency possible. Then during the cocktail party, I said, what do you do? Then he told me he's in the logistic, moving company for helping people to move. I spent the whole evening explaining to him, blockchain too can disrupt your industry. Blockchain is disrupting every single industry. That night when I drove home, after speaking to him the whole evening, that whole idea of applying this, sharing economy concept beyond just property and assets co-ownership into services, get stuck in my head. For the next 2 years, I've been traveling around the world, telling the story, created the whole concept of MuleChain. And basically what it is, let me explain to you. I feel so passionate about it. I dropped everything I was doing on the WeCoOwn, on the co-ownership, because I feel if I make another successful venture on the fintech, probably only about less than 1 or 2% of the world's population I can benefit. But if I can make the MuleChain project successful, I can really reach out to more than 90% of the world's population. I'll explain to you why. And this TurboChain, I'll leave this topic later on, which is not as important. So after doing, over the new year in 2018, so I spent a lot of time trying to create a new name for the new venture. We decided on using the mule concept. Mule is a hardy animal, they can carry 300 pounds versus a horse can only carry 150 pounds. So now, what is the MuleChain? Let's say you are based in Ryadh, okay? You are a member of the MuleChain platform. So you post your travel itinerary. and you're going to go to London next week. Now, all of a sudden, you post your trip itinerary there, somebody going to approach you, P2P. They say, well, my daughter's studying in the university in London. Can you bring a jacket to her? If you do, I'll pay you $100. Now, chances are your airline tickets only cost about $500, right? So 20% of your trip cost is financed by simply doing a favor. You don't even have to do extra work for anybody. Basically, what we're doing here is turning every traveler around the world to be able to make money for themselves as their own boss, as long as you travel. So from a cross-border traveling to an intercity, to an intra-city local meal delivery, there's three parts. We want to focus on creating a generic platform, generic app for anybody who are on the move. You can make money for yourself. You're moving from the west side of town to the east side of town tomorrow. Somebody happened to, want somebody to bring something over there. For example, there's a lot of extreme situation as well. So again, on the website for MuleChain, you will see one of my video and talking about, I really encourage you to watch this video to understand this whole concept on the MuleChain platform and this video here. So basically, that's the first step to make everybody on the move to be able to make money for themselves. The second concept came in April. Then we created a concept called Pack Station. What if this person doesn't want to meet you in person because meeting people online could be very dangerous? So he can actually turn on his mobile phone, look at the map on the MuleChain app. Then all of a sudden he see all these pack station owner right around him on the Google map. What is the pack station owner? It's basically anybody sitting at home. You can let somebody drop an item. You take care of it overnight, just leave it at the corner of your apartment. Next day, somebody else come to pick it up. You make $10. Why not? So this is the second most significant concept. First of all, we make everybody on the move to be able to make money for themselves, be their own boss. Secondly, we make everybody staying at home doing nothing to be able to monetize all your idle time sitting at home. Think about the significance. This is not talking about only wealthy people of a WeCoOwn project. You have to have money to own something. Now we're talking about the whole world population. That's why beyond 1%, we're going to 90% of the whole world. Think about the whole, Africa, South America, whatever, in the Southeast Asia, all the emerging market. Anybody can create new jobs, make money for themselves for the first time. And you don't need to have any knowledge, education. All you need to have is just business ethics and don't break the law. That's all. All of a sudden, we get to create jobs all over the world. So again, on the MuleChain platform, you got the requester who have any the demand to send the jacket or anything, Then you got the MulePal. We stopped calling a mule because of the sensitivity. We call it MulePal. You are the pal of the mule. That's the person who travels. Pack station owner could be anybody. Think about it. The pack station is even more significant than the MulePal. Why? Because there's such a big population in the world of senior citizens, of handicapped people. They cannot go out, attend a conference, go out to get a job. But previously, they can only become a burden of the society sitting at home asking for government's charity money. All of a sudden, you can use your spare time. Let's say your grandparents, you have all the time to kill every day. Why don't you act as a pack station owner? You don't have to take any item. You can say, I only take the light item, like a jacket under 2 pounds or whatever, Then you make some additional money. With that additional money, you can buy some toy candies for your grandchildren, So this is the significance of it. And then because of this egalitarian aspect of it, I sort of devoted a lot of my time in 2018, 2019, and spoke in a lot of conferences all over the world. And all those, information is on the MuleChain.com website. Now, if you take a look at it, why is that MuleChain technology company, it's a MuleChain blockchain based on blockchain. Why is that different from a traditional tech venture? Because any tech venture, let's say you create a new product, a new service, you want to sell to somebody. Any business, you want somebody's money from his pocket. But what does MuleChain sell? You sell job opportunities. Anybody can, instead of paying for your services, you get to make money by being a mule pal, a traveler. Then you can make money by simply staying home. So that's the significance. And that's made possible by blockchain. Why? Because remember what internet did to the whole world? That's basically, you have all the website all over the world. That's a knowledge equalization. What blockchain, the decentralized database concept, made possible is to make the next step, the business transaction, possible to equalize the price among of the same item around the world. Let me give you a good example. Let's say in the iPhone, in the US, you could sell for $1,000, but in Moscow or in a different country, it could be selling for $1,500. It's a premium, okay, or $2,000. So previously with internet alone, you can only see on the website knowledge equalization. You understand, oh, that's cheaper over there, but it's so expensive here. What can I do? Nothing. Now with MuleChain, based on the blockchain opportunity, we can make that business transaction possible. Why don't you just go to the website and then order that iPhone and to be delivered in the US to a pack station owner? Then you engage another mule pal to pick up from pack station owner, bring it back to Moscow, and then drop it to you or drop it at another pack station in Moscow. You go there to pick it up. The pack station owner could be anybody. It doesn't have to be a commercial outlet. It could be any apartment owner just 2 floors above you, right? So we make everybody to become a pack station owner. You yourself, your friends, your family, your parents, anybody, whenever you want. You don't have to be a dedicated worker. These are the gig economy. Whenever you're not traveling, you make money as a mule pal. When you're not traveling, you switch on your status as a pack station owner. There's more about this concept, and I understand we don't have a lot of time to talk about this, but I want you to walk away with the concept, and that's innovative concept introduced by this technology, which wasn't available before. So everybody talking about sharing economy, but what is the additional advantage that MuleChain project bring to the table? That's something called a convenience assistance service. Because you're going to travel from Ryadh to London anyway. You're not making a special trip to make that $100. If a requester send it to FedEx or UPS, FedEx and UPS have to increase their capacity, hire another plane, burn more fossil fuel. But in our human society, there's so many inefficient use of our time and activity. What MuleChain is trying to capitalize on is to take that inefficiency away. Because you're going to go to London anyway. You're not burning any additional fossil fuel. You can together we can get to save the world, save the earth. So that's one of the most important, convenient assistance service concept. A few words about how we plan to operate this business. And because we want to be the genuine, really P2P business, and everybody benefits. So that's kind of egalitarian, right? Anybody can make money with no boss. And then we created a concept called the ranch operator. In different parts of the city, you basically own the business. All you have to do just to be, internet social media savvy, good at marketing, you run that business in every city. Every city could be, hundreds, thousands of range operator, anybody working for themselves. And because of the technology, decentralized. So let's say the mule pal, you do a job, you pay the platform 5% of your fee. You make $100, right? $5 go to the platform. A pack station owner make $10, you make 50 cents to the platform. But if you are the geographically located in that city, you're a ranch operator, 51% of all the revenue belong to you. So that's a whole scheme we're trying to deploy this project. After 2 years, we developed the whole platform and the app right in the beginning of this year. And we're trying to launch the business to do the marketing. Then came the pandemic. All of a sudden, there's no trafficking, no traveling anymore. So right now, the project is on hold. We're waiting for the pandemic, ease off. And as I said, there's three parts of it: cross-border, that's our bread and butter; intercity between LA and San Fran, between Riyadh and Jeddah. Then within city, the intra-city. So as a result of the pandemic, that local delivery, meal delivery, grocery delivery, just on fire. But that's not a business any new startup venture can get into because there's no profit. Those are all, and being shoveled money by the VCs. They None of them is making business. They're trying to get you. It's already too late. Unfortunately, the VC got involved to that stage. So everybody trying to grab market share. You look at all the leading player, and Uber lost money, no more passenger. Uber Eats is still okay. Then you got Grubhub, you got Postmates in the US, in the China, it's just on fire, Meituan and Ele.me, Alibaba, all this company. So they're only focused on the part three. But again, that's not for a startup company to get into unless you have a lot of money and shovel to your nose by the VCs. So what we're focusing on still zeroing the part one business and waiting for the pandemic to ease off to pick up where we left off. So that's why in the beginning of the year, we put the MuleChain temporarily on hold, and we pick up where we left off in 2017 on the WeCoOwn project. That's where the three technology company, and nowadays, and as you can see, since the blockchain has provided so many additional advantage that wasn't possible before, and we're trying to exploit it to the extreme that we can do. But one last word of caution. A lot of people get involved in blockchain. They focus on the cryptocurrency part of it. So there could be a lot of currency speculation, punting. That doesn't represent the entire world of blockchain. Blockchain has a lot of healthy, wholesome, I don't want to prejudice the other side, and application for corporate, for the government, for the human society. So I know I'm running out of time. I will leave 10 minutes, 9 minutes, for Q&A. And if you need any more information, feel free to contact me, and then we can carry on the conversation in a deeper level.